Hey there, everybody. Thomas Wood with ValueCharts.com. It is Wednesday, December 9th. We're going to take a look at one of my favorite setups that happens almost every day in a number of different markets. And this is a head and shoulders pattern. Happened twice in crude oil today and worked out fairly well both times. We had the petroleum status report today. First thing happened was petroleum status report comes out. That's where this is right here. We spiked high. We came down. We did what's called an inverted head and shoulder. So we went left shoulder, head, and then right shoulder. That gave us a neckline right here at 73 or 74, and then we proceeded to take a long on that from 74, took it up to for about $160 a contract. Got out right over here when we started to retrace and change back to neutral on our Trender Pro by changing to blue color. Then we went and we had a head and shoulders here, left shoulder, head, right shoulder. So we had an inverted head and shoulders initially that was very small, and we had a much larger normal head and shoulders. It broke the neckline on that head and shoulders at 38.52 and then proceeded to sell off all the way down to a low so far of 37. So you dropped by about 1.5 points. But either way, this is one of my favorite setups, and what you're looking for is you want to have your left shoulder and your right shoulder lower than the head of the pattern. And ideally, we're going to have a neckline that's just about even, just like this was here, where you have nice support where when it breaks, it should run just like it did with the head and shoulders pattern. So keep an eye out. They happen on all different time frames in a lot of different markets, but head and shoulders and inverted head and shoulders patterns are really good ways of identifying turning points when a market's getting ready to break out and run. So that's all I have for you for today. I will see you in the trading room bright and early tomorrow morning. And until next time, happy trading.